What's going on, everybody? Cullen Gandy here, and today I want to talk about the tips and tricks that I use as a sales professional in the mortgage industry in order to get consistent five-figure months. And these are basically things that anybody can do. I'm not a genius. In fact, I'm not even probably half of a genius. You don't really have to be really savvy to be a salesman, but you do have to follow up. But before that, if you're interested in educational content that is surrounding the finance and mortgage finance space, or just want to learn how you can make a little more money in general, I guess, this is going to be the channel for you. So please go ahead and consider liking this video if you enjoy it and get value out of it, and subscribing so you can get more videos going like this in the future. Now, as a mortgage loan originator, which I have a feeling a lot of you may be, because a lot of my channel up to this point has been surrounding mortgage loan origination and how to get paid doing it. For this segment, I'm going to be talking mostly about how to get the good sale, but also how to set yourself up so that when your opportunity arises for a sale, you're going to be ready to jump in. The very first thing I would do if I were a mortgage loan originator, fresh out of the NMLS SAFE test and into my new company, is I would spend most of my time where I am the weakest. What that means is, going into any job, going into any type of profession, you're going to have things that you're confident about, and you're going to have things that you're not confident about. And if you're going into the mortgage loan origination, aspect of the lending industry, then chances are you think of yourself as somebody who's pretty savvy about sales, somebody who knows how to talk to people, how to wheel and deal, and how to get things going. But what I would encourage you to do before you even get started, and I have to credit my fantastic manager over at InterFirst, Jeff Michael, for setting me up for success, because you really should start out going into the things that you really don't understand at the beginning, and how to navigate around the software where you're sending out applications and amending the loan so that you can make sure that it is compliant and you can push it into underwriting. This can be fairly difficult, and nobody really sets you up for understanding how difficult this can be, especially if you have a client with a lot of different needs from, let's say, they have an interesting credit profile and you need to figure out how you can restructure a loan in order to make sure it is Fannie Mae and Freddie Mac compliant, what's called a QM loan, which you can check out in this other video I've made. Or if they really want to be able to get cash out, you need to know like underwriting guidelines, which a lot of folks, if you're a salesperson, you're usually not going to be an academic. You're going to have to know that the guidelines around getting some of these loans pushed through is usually going to be, for example, if they want to do cash out, you can only do up to 80% loan to value of that. So you're going to have to know how the numbers interact with your loan origination software. Working with all of the loan origination software can be a really difficult aspect of the job because you have to navigate through several different pieces of software that integrate into this one interface. For example, you have what's the AUS, or the automated underwriting software, and those are given to you by Fannie Mae and Freddie Mac, which are the two loan mortgage-backed security aggregators. So you have to make sure that everything that's coming back to you from the AUS that you're incorporating into the loan so you can make it compliant. Otherwise, you don't have a deal yet, right? So you won't get clients if you don't have deals to sell them. But that's not only the other thing. Navigating guidelines is very difficult, and a lot of times people don't understand how that works. Sometimes just getting the leads can be the really difficult part because if you're not a seasoned salesperson, a door-to-door knocker, you might not be used to the idea of scrounging up business from nowhere, especially if you don't have a lot of inbound leads. So if you don't have a lot of inbound calling going on, if you're having to go out and find different people in order to be interested in your process, like going to coffee houses and manually soliciting people, this is going to be something that you're going to have to get really, really excited about and spend a lot of time on, right? Marketing yourself and marketing basically how your product is different from every other product. The second really, really important thing that you need to do in order to make these big five-figure months as a loan originator is going to be what's called pipeline management. It's essentially time management, but it's all up on your screen so you can see it. It's palpable. If you're somebody who really gets excited about the sale, about the hunt, And so you go out and you make 1,000,000 calls, or you field 1,000,000 inbound calls, and you get all this business and you squeeze it into your sales pipeline, then you're gonna have a bad time. And nobody lets you know about this in the beginning. So if you get, like as was my problem starting, way back in the beginning of my process, I shoved like, 100 to 150 applications for loans into the front end of my pipeline. And I didn't have any assistance. I mean, they don't give new loan originators loan originator assistance. So basically, I was the only contact, except for the processor, on like 100 to 150 loans. And these are 100 to 150 clients that each usually had 100 to 150 unique problems and ideas about their loan and questions about whether or not there's a rate drop available or all this. So it was a real headache, a real nightmare. It can lead to you sort of losing a lot of that business just by sheer not being able to follow up constantly with all of those people. Unless you have a team underneath you, make sure that you are optimizing your sales for, down the line in your pipeline, or you've covered yourself by having a crackers team. The third, and one of the really key things that gets me these huge fat checks, fat commissions, is one particular sales aspect, is one particular part of my, repertoire of sales, I guess like catches, I don't know how you'd call it, sales pitches, and that is really to assume the sale. Assuming the sale is a term that people use for when you segue one part of your pitch into a sales meeting into the eventual closing of that deal without really the client knowing, right? So you've assumed that they've already bought into your deal even before they've given you the indication that you're actually going to buy this product that this person is selling you. I'll give you an example. One of the rate locks that I was able to get, one of the applications that came in, as a gentleman, he was looking for a very specific type of cash out loan up to 80% in order to pay off a HELOC, right? But he was getting a lot of good offers, and he was getting a lot of mixed signals from lenders because there are sometimes different prices for cash out refinances than just for regular refinances. Well, during the course of the call, I gave him the whole pitch, and he seemed, pretty positive about it, but he sort of led me to believe that this was sort of in line with a lot of the other costs and a lot of the other rates that other people were offering. So one key thing that I did is that you want to take your client as far as they will let you go when you're on the phone with them. So instead of just giving them the quote, giving them the pitch, and sending them on the way with with an application outstanding, I made the application and the signature of the application just seem like a part of the process of the quote, right? I segued into him step by step, eventually closing on this deal. One of the things that I would do during the course of the call is I would take him step by step as if it were just part of the process of the quote. I would say, hey, look, the next part of this process is that I just need to confirm that you got my email. It's going to have that application in. We just want to knock that application out right quick so that I can get you the best terms possible. Actually, taking the application is one of the main objectives of the sales call. It's actually most of the sale, if you're honest. But I just made it seem like more a process of the quote and the telephone call. So he took the application, he let me take him through the whole application while he was on the phone, and then he let me send him the documentation, the disclosures that we have to send him, and he confirmed that he signed them, right? So in that one phone call, I assumed the sale for him all the way to the point where he was then in underwriting. He had submitted all of his documentation, and now he was in underwriting. Now, I gave him reassurances. Yeah, you're never obligated to borrow with any lender on a refinance transaction, even up to 3 days after closing. But statistically, if you can get a client into underwriting, and if they build a good rapport with you on that first call, they're not going to shop around on you or leave, because we had basically the same, if not a little bit better, terms with the same amount of cost, third party. One really key thing to getting those fat monthly income checks that a lot of people don't think about or talk about, but can really grease the wheels of your loan closure rate and your loan funding rate, is having good HR management skills. This is sometimes something that I can catch myself sliding on if you're having a bad day. But HR management skills, that is to say, managing how you converse with all of the ancillary or different parts of the loan process, especially all the people in that process, are really important because they're the ones that can push your loan forward or, halt your loan in its tracks. If you don't follow up with the processor, then the processor might not be that kind of proactive type of person that you would want to get that deal moving. So following up with the processor, sometimes just as important as following up with your client, right? Or if the processor's giving you attitude, or if they're absent, right? You follow up with them, and if they don't get back to you, you get your manager involved or their manager involved, not in a malicious way, just saying, hey, look, sent you a correspondence, love a response on there. But not only that, knowing the office sort of lingo and jive and what you're supposed to be doing and the best practices, that can be very important. Little things like not adding the borrower on a back-end email, especially with the underwriter. That's a big no-no, and the underwriters are going to get pissed because they don't want to get more emails than they usually do. And being polite, but being insistent. And this goes back to following up, right? Always be polite, but always be following up. Both ends of the spectrum, you're going to be following up. This sometimes even has to do with your own management, because they've got a lot of other people that have them asking questions. So if you don't stick out, you're not the squeaky wheel, you're not going to get your needs met. My particular method for getting my manager to notice me is we have this Slack chat channel, and I will just be like, hey Jeff, grab you, ? And then I immediately just type 3 or 4 more question marks followed by enter. So it just pops up on his little Slack on computer. I'm sure it pisses him off, but it gets results because he gets back to me. And a lot of other people in my district, my pod, sometimes they need help with something, but they'll only say, hey Jeff, whenever you have a minute, and then they don't respond for the rest of the day, right? Gotta keep following up. And then the really, really big, really, really important part of getting these fat commissions in hand, right? A bird in hand is what we want, is all of the ritual around the closing process. That's nursing that closing process with your client like it is the last, piece of bread in a post-apocalyptic zombie, movie or something. Like you just have the last piece of food and you want to make sure it gets to where it needs to go, which is right in your tummy. For me, this means that we have a very specific way of going about scheduling the closing. We have the first, what's called the preliminary closing disclosure, and then the final closing disclosure, and then the closing happens, and then 3 days later, there's what's called a rescission period for what I mostly do nowadays, which is refinances. And then the funding happens. I make sure to be a contact at every point when there's a development on the closing end of the loan experience for the client, right? And this is very important because not a lot of loan officers in different companies often are the most consistent part of the contact process with the client. When I get notification that a client is cleared to close, I immediately fire off an email to the client saying, hey, this is really important, you're cleared to close. Also, what I do is I try to nurse when they're going to be closing and at what time during the day, because that can be beneficial to me. I'll give you an example. I get paid by quarterly production, so if a lot of my fundings don't fall right within the quarter, I don't really get as much credit for those until next quarter. So we're coming up on the final weeks of Q2 in 2021. So every loan that I get cleared to close, I'm following up with the client saying, hey, you're cleared to close. Try to schedule your closing for the 25th or 24th or before, and try to schedule that loan after 1 p.m. Central Time. Now, why is that important? Well, if I schedule those folks for the 25th or the 24th, I know that 4 days later, for business days, which does include, Saturdays, but not Sundays and holidays federally, I know they're going to have at least 4 days left in the month to where those loans are going to fund, and I'm going to get credit, and I'm going to get those fat commissions next month. So that's really important. Managing that pipeline at the beginning both with your manager and your client, but also manage that, micromanage that process at the end, right, with the closings with the client. And this is also really important for making the client really comfortable with the terms of the loan on the back end, right? So a lot of times there's some moving parts on the back end of a loan that a client doesn't really understand. How do payoffs really work, right? It's the balance plus whatever the payoff fee is that the company sent over, plus what other, there could be some prepaid interest, and they don't really understand how that works. So calling the client whenever there's a preliminary or final closing disclosure is available, super, super important, because if you don't explain it, and they get a little sheepish, I've had it happen to me, they will jump and run or at least try to reschedule, and that's never what you want to do. You don't want to be servicing a bunch of reschedules. And then the last thing that I think has gotten me the most business and made actually my job a lot easier is sort of following up after the funding process, after the loan is closed, and soliciting, that is selling a little bit more, some reviews, right? You will need some marketing, because now I'm actually not having to do as many calls, but I'm breaking records every month with the amount of rate locks that I get. And this is solely because of referrals, right? You get referrals from the people that you do well by. You don't get referrals from the people that you don't, but also you don't get referrals or reviews from people that you don't really ask them to review you, right? So it's very important to ask, to sell on the marketing end, and to get your name out there, because otherwise you're just one more LO in a crowd of a billion people, right? One really important non-sales related practice that I have that has really garnered me a lot of business and taken a lot of commissions, put them in my pocket, is the marketing, the self-marketing. And this comes from my time as an artist, right? A performing artist. I market myself, and I would encourage you to market yourself as a performing artist or as an entertainer. What does this mean? Well, it means, one, we're gonna need to get professional headshots done. That is to say, you want to have something stuck on every email, on every Slack message, every correspondence that has your face on it. You're looking sharp, you're looking fancy, you're all photoshopped or whatever you need to be, because that really does stick out in the minds of people who don't really put a lot of effort into that. Two, you're gonna wanna always be on what? Social media. Gotta be on all of the social media. Even the ones you don't think are gonna pay off right now could pay off later on during the course of your career. Like right now, TikTok is a really, really important social media platform, but it's generally younger, so not a lot of folks, not a lot of folks are getting houses when they're 16, right? But if you cultivate an audience there, that could pay off in the long term, right? Stay on all of the social media, even if it's just for a little bit, every day or every week, just putting yourself out there on social media, it's gonna come back to you in some way or form. Thanks so much, guys. I hope this has been really informative. I want all of you folks to get those big 5-figure-a-month commissions in your pocket and buy Lambos, and we can all ride around on the highway together with the tops. I don't know what you do with Lambos. I don't have a Lambo. But I hope you get it. I hope that this was informative, and if it was, please leave me that like, consider subscribing, and I will see you back here for more videos on finance, mortgage finance, sales, and just anything to get you where you want to be financially. Peace, guys.